Good morning and welcome to BQ Prime. You're joining us on this special broadcast where we're discussing the Q2 results from various private banks that have announced their numbers over the last couple of weeks. Most important of which, of course, is Kotak Mahindra Bank. Now, as you know, Kotak Mahindra Bank did report its numbers on Saturday, where they announced that their net profit has grown by about 24%, largely because of an increase in the net interest income. But what is more important, however, in the Kotak Mahindra Bank case is the announcement of a new CEO. Remember that on the 2nd of September, Uday Kotak, the founder, MD and CEO of Kotak Mahindra Bank, suddenly resigned from his position. He was supposed to only retire by 31st of December, but he announced his resignation about 4 months in advance. And at that point in time, he had said that the bank had sent out some names of potential successors to the Reserve Bank of India, and that the bank was awaiting the RBI's announcement in this regard. So on Saturday, Kotak Mahindra Bank said that the RBI has approved the appointment of Ashok Vaswani as MD and CEO of the bank for a period of 3 years. Now, he's supposed to take over anytime before the 1st of January 2024. And according to the bank's management, when they were addressing reporters, they said that he will probably join around in December because currently he's working as president at Pagaya Technologies, which is a US-Israeli AI firm. To discuss these numbers further, as well as the impact of all of this on the stock, we have with us Aditya Shah, founder of Hercules Advisors. Aditya, welcome to this conversation. I want to start with the Kotak story. What do you think of the new CEO appointment, especially because it's an external candidate, as opposed to the speculation which said that the internal candidate would probably succeed Uday Kotak?
So the RBI has got its way. The RBI wanted that there should be an external candidate so that de-risking of Kotak Mahindra Bank happens away from Uday Kotak. And that's what has really happened. Ashok Vaswani, who has got rich experience across Citibank, across Barclays, has come in. Mind you, he's not very young. He's 63 years of age, and RBI really wanted an external candidate. So net, I am very happy that the hangover from the stock per se has gone about who is going to beat the bank. Now what is going to happen is the new candidate, Mr. Vaswani, is going to come. The market is going to really understand what are his strategies, how does he want to lead the bank really forward, and that's how the market is going to judge Kotak Mahindra Bank. Per se, I also don't believe that Uday Kotak's influence over Kotak Mahindra Bank will go away so fast, since he's the largest promoter shareholder of the company. So Uday Kotak will be there in the background. Meanwhile, Ashok Vaswani will now create new strategies for the bank to go ahead. So net positive for Kotak Mahindra Bank in the longer term. However, we need to wait and watch when he joins in and see what the strategies really are.
Yeah, it's interesting that you bring up the Uday Kotak point because he has been appointed as a director on the board, of course, by the shareholder. So he's going to continue there for a 5-year period as opposed to a CEO's tenure of 3 years. So he's essentially there at the bank longer than the CEO is. But interestingly, the numbers that came out on Saturday, a lot of analysts called it a mixed bag sort of results because while, yes, the profit and net interest income numbers have been strong, you did see some slippages come in because of the unsecured lending portfolio of the bank, and that is something that the bank is closely watching. Any views on that?
So, RBI governor has already said that he's watching the unsecured loans very carefully. And you yourself had put out a tweet saying that ICICI Bank had given up 50,000 crore rupees of loans, considering the fact that unsecured is growing very fast and unsecured slippages are going to come in. For Kotak Mahindra Bank, I'm not too worried per se because they have got one of the cleanest books, and Uday Kotak generally took away all the NPAs that are there without hiding them. So not too worried there. The slippages were at about 1,300 crores, which is purely okay. From that perspective, not worried too much. What I really want to see is going forward on the secured and unsecured side, how fast they really want to grow, because RBI governor has now really warned on the unsecured side of it. So I believe that the unsecured growth for even Kotak will start to slow down, and they will start to focus more on the secured piece of it. So not to worry on the result side of it, even the NIM contraction that Kotak really had. Kotak has the best NIMs amongst the top banks at about 5.15%. And there's nothing to complain per se about that. So Uday Kotak is leaving a very healthy bank for the successor. Unlike Yes Bank, where there were a lot of problems, a very healthy bank, a very good credit culture within the bank. So not to worry per se on the slippages as well.
I want to touch about the other bank that announces results on Saturday. Of course, ICICI Bank, the second largest private bank in the country at this point in time. ICICI Bank. I know that you've repeatedly talked about ICICI as the next HDFC and sort of better placed to tap into the broader economic growth in the economy. You saw a 25 bips dip in the net interest margin for ICICI, but otherwise the numbers were pretty strong as far as the private sector banking pack is concerned. To your mind, what is something that people should watch out for at ICICI?
Nothing per se. ICICI is predominantly a retail bank now. 56% of the loan book is now on the retail side of it. So there probably there's no problem per se. The bank is well capitalized. The slippages are well within control, and the provision coverage ratio is also very strong. So I think that over the next 2 to 3 years, ICICI Bank will do pretty well. Of course, the valuation there are not cheap anymore. It now trades as the most expensive bank, given the fact that it trades at 3 times price to book. So in my view, nothing to complain about per se. I will want ICICI Bank to not grow unsecured retail too fast, because there is a bubble that is getting built up there, and a lot of banks will get caught over the period of next 1 or 2 years. So in my opinion, ICICI Bank is a story of a lot of stability. While HDFC Bank undergoes a lot of transition with the merger, ICICI Bank will be there to pick up the pieces. And over the next 2 years, we will have three banks: HDFC Bank, Kotak Bank, and ICICI Bank, which will lead credit growth in India. So India is poised for a very strong credit growth, very strongly capitalized bank, and nothing to worry about per se. On ICICI Bank, I don't feel that there were any misses. Small misses were there, but that's really okay. It's a business. In my opinion, very strong numbers from ICICI Bank, and the stock price is really showing that when it has had it nearly about 100% in the last 2 years.
Right. Touching on the unsecured piece a little bit further, I want to dig a little bit deeper than what the headline says. So, of course, yes, the RBI has cautioned against rapid growth. There are reports which say that the small ticket size loans in the unsecured is where the stress is largely emerging from. The tweet that you had mentioned that I put out, so that was specifically for loans under 50,000, and that's where ICICI Bank has said that they don't have any meaningful presence, neither do they intend to grow their business there. But that piece is where your smaller to mid-size private banks, as well as NBFCs and fintechs, sort of tend to play. High turnaround business, obviously a better yield on those advances. But is the party over in your view?
See, we were on the Bajaj Finance call, and Rajiv Jain clearly cautioned about the mispricing that is happening on the small ticket loans on the unsecured side of it. Unsecured is a highly risky business where there's no secured asset per se, and the yields are very, very high. So the credit costs are also very high. In my opinion, the party is going on. The party will stop in the next 1.5 years. And this leg of NPA cycle will not be corporate NPA cycle. This will be a retail-led NPA cycle per se. And all those lenders, banks, NBFCs who are going very, very aggressive unsecured retail loans, I would be really very worried there. So in my opinion, a good bank, a good lender has to have a balanced approach, as Kotak, as HDFC, as ICICI have. Both secured and unsecured pieces are going steadily, and they are not going too aggressive on the unsecured side of it. So the party is going to continue for the next 6 to 12 months, after which there is going to be a retail NPA cycle that we have never seen before in this country. And that is surely, it's just a matter of time before that comes.
So, to your mind, the provisioning situation seems pretty strong. Most banks are carrying about 70-odd%, at least the private sector is carrying about 70-odd% on the provision coverage ratio. Do you think that's going to be enough to cover for any future losses, or do you think that probably the losses are going to outpace the provisions?
So what really happens is large private sector banks have a huge profit pool, and they can afford to take a small or even a bigger hit. The problem will start with the smaller lenders where the profit pool is not really that great, and any rise in slippages will then mean a hit in the profitability, and they will have to raise capital. So companies where unsecured loan is growing very, very fast and the profit pool is just 1,000, 2,000 crores is the problem. And smaller private sector banks and also smaller NBFCs is the problem. Companies like HDFC Bank, where the profit pool is about 10 to 12,000 crores every year, I don't think that there's a problem. Even on Kotak or even on ICICI Bank, there's no problem. In fact, on ICICI Bank, we are sitting on a provision coverage ratio of about 83%. Even they have got a management overlay per se on the provisions as well.
Right.
So I don't feel these machines have a problem. The machines that do have a problem are the smaller private sector banks.
Right. I see. It seems that we have lost Aditya's voice, but just to wrap up sort of the points that he had raised, things are looking good for ICICI Bank. For Kotak, of course, a change in management, that's something that's going to be closely washed out for, but he doesn't see any sort of major shake-up within the Kotak Mahindra Bank system. What is going to, however, worry analysts and market watchers in general is the fact that unsecured lending as a piece is starting to show signs of stress, and that is likely going to create a sort of new NPA cycle within the banking sector, because a lot of banks as well as NBFCs have been growing really fast on that portfolio, especially the sub 50,000 sort of loan ticket size, which are considered small ticket size in general. That's where the stress is coming from. What we also understand is that going ahead, the larger banks are more or less pretty much well placed as far as the provision coverage ratio is concerned, but the smaller banks who have a smaller profit pool, they may not be able to provide for these loans. That's what Aditya Shah of Hercules Advisors had to point out. Thank you so much for joining us on BQ Prime. Do keep watching through the day. We have a lot coming.